In this video, you'll find a detailed step-by-step guide for beginners on how trading bots work on Binance Exchange. I'll break down how the bots operate, what types exist, how to configure each one, and which option is best for you. All of this is truly simple, even a complete beginner can figure it out from a mobile phone. Let's go. So the main thing you need to understand from the very beginning is this. On all exchanges, trading bots work according to the same principle. These are classic grid bots. What does that mean? Every time you launch such a bot, it builds a grid above the current price and below the current price. This grid consists of preset buy and sell orders. If we take the example of the most basic spot grid bot, the logic is as follows. When the price goes down and enters the grid, the bot buys the asset. When the price goes up, the bot automatically sells it, locking in profit. The process repeats over and over as long as the price stays within range you set. On Binance, you'll see many different trading bots, but essentially they differ in two aspects: where they operate on spot or on futures, which type of order is used to execute the grid steps. I have a separate video about types of trading orders. I strongly recommend watching it to better understand how the grid orders inside trading bots function. And then come back here. So yes, you understood everything correctly. There is no magic here, it's simple math. The bot repeats pre-programmed actions based on price movement. It's not AI, not predictions, and not secret algorithms. It's just a machine doing exactly what you tell it to do. And yes, this type of trading does not always make profit. That's why I recommend subscribing to our private Telegram club, where certified traders provide up to 5 trading ideas every day. You can open and close trades together with them, earn money and receive guidance on every position. The link to Odo's Alpha Club is in the description of this video, and when paying for subscription in Telegram through the Tribute server, if you enter the promo code RODI, you will receive a 15% discount on your first payment. Well, let's continue. Since these bots work both on the spot and on the futures market, let's break down the advantages and disadvantages of each. Spot bot. To see noticeable profit on a spot bot, you usually need larger capital and more time. But spot bots have one major advantage: they are significantly safer. Why? Here is, for example, our visual grid. If the price goes up, the bot will lock in profit and you'll remain in USDT. If the price goes down, you don't actually lose anything in coins, but numbers of coins stays the same, only their market value decreases. In this case, you simply become a more long-term investor and wait until the price returns to the range where the bot was accumulating buys. After that, you can either sell the asset or wait for further growth. So the only real risk of a spot bot is time. The funds always remain yours, only their current value fluctuates. But as we know, the market is cyclical, and in the long run the price often returns. Future bots. Future bots allow you to trade with less capital but greater impact, thanks to leverage. This means even with a small capital you can open long positions. Profits can be significantly higher, but this also brings key disadvantage: risks are much higher. Your position can always be liquidated due to high volatility. This applies to both longs and shorts. And yes, there is always a risk of situation like the one that happened on October 10, 2025, when the market suddenly crashed and many bots were not just closed at break-even but were fully liquidated. In such a case, the trader loses absolutely all capital. However, under normal conditions, futures bots can bring very high profits, precisely because of leverage and frequent averaging. So now we figured out how trading bots work, how spot bots differ from futures bots, and what risks each of them has. Now we move to the next step. On your phone in the Binance mobile app, we will go through every type of trading bot available on the exchange. Look at how each of them is configured and determine which one is right for you. To start using a spot bot on Binance, you must have a registered and verified account as well as funds that you previously deposited on the exchange. If you still don't know how to complete registration or verification, you can simply use my link in the description. First, it gives you the opportunity to receive bonuses of up to 700 USDT, and second, you get reduced trading fees. This is actually important. Why? Because every time a trading bot opens or closes a position, a fee is charged. And this fee either reduces your profit or increases your loss. Registering through my link will allow you to pay lower fees, which means earn more and lose less. It's a simple and very noticeable advantage. Also, under the registration link, you'll find a full playlist with detailed explanations of full account registration, identity verification, depositing funds, as well as tutorial videos on how the spot and futures terminal work on Binance. All links are in the description under this video. To open the Bots tab on Binance, go to the bottom and expand the trading terminal by tapping the trade icon. After that, open the Spot Grid tab at the bottom, scroll down and tap Explore Bot Marketplace. Now tap this icon on the right to expand all types of bots available on Binance. Let's go through all of them from the first to last. We'll start with the Spot Grid bot. Open it. In this section you can choose preset configurations, see their profit after fees, and the trading ranges in which the grid trading will operate. There is also a popular tab at the top. If you tap it, you'll see the most popular bots that users are already running. You can subscribe to them. Keep in mind, as we discussed, spot bots require a large initial investment. For example, the most popular bot, which has generated $23,000 over the last few days for operation, requires a minimum investment of $1,183. Now let's move to the manual section where we can configure our own bot. If you scroll slightly lower, you'll see the available configuration option you can adjust. You can tap to the small 3D AI pencil icon and the system will automatically fill everything in. What settings do we have here? The first is price range. This is the lower range where the buy grids will begin, and the upper range, meaning above the current price with which the sell grids will be placed, as well as the number of these grids. Keep in mind that the more grids you get, the more orders there will be, and the more funds you will need for the bot to operate. For example, right now you see that with 33 grids, I would need $199. If I change these to 50 grids, I will need $297. If I change it to 5 grids, then $38 will be enough. So the more grids you want, the more funds you must invest. After that, you simply enter the amount of money you want to invest and tap Create button below. Your spot bot will begin operating. Let's move to the next bot. At the top left, expand the bots icon and go to the futures grid section. Here at the top, you also have 3 tabs. AI, that is the pre-generated strategies created with different time frames, returns, percentages, and grid counts. There is also the popular section, where you can see popular futures grid bots among users, how long each has been running, how many subscribers each of one has, and so on. Let's open the manual tab. Here, just like before, you can tap the 30 days AI pencil icon and the system will automatically set everything up. You can choose how you want to trade, long, short, or neutral. I personally recommend using neutral. Below that, we see the price range from and to where the grids will be placed. Below that, the number of grids. Below that, the amount of money you want to allocate and then the leverage you want to use. After that, tap the Create Neutral button and your futures grid bot will start operating and executing trades. Tap the menu on the left and scroll down the futures DCA bot. As you can see, it is marked as new. Open it. Here, as you can see, we cannot choose existing bots. The system simply offers to configure it manually. So how is it configured? First, choose buy or sell, meaning long or short. Below, in the price settings under price deviation, this is the percentage distance at which the bot will perform additional buys. For example, we can set it to 0.5. Below that is take profit per round, the percentage at which the bot will take profit after the entire averaging sequence is complete. For example, 1%, and the bot will close the whole position once profit reaches 1%. So for example, every time the price drops by 0.5%, my bot will add to the futures position, for example, in long. It will keep adding, and so on. The smaller this percentage is, the more frequently it will add to the position. After that, when the price reverses and begins to rise, as soon as it reaches profit, in our case 1%, the trade will automatically close in profit, and then the bot will automatically start looking for new entry points again. Below, in the investment section, we can set the leverage we want. Base order margin is the size of the first order, meaning how much the bot will use to open the first long or short position. In our case, for example, $28. And DCA order margin is how much the bot will use to buy each additional entry on every 0.5% drop. Below that, you can specify how many such additional buys, meaning orders, you want. For example, you can set up to 100 of them. Then the bot recommends that each next buy should be $40. After that, you press the create long button and your futures DCA bot will start operating. This is the classic dollar cost averaging strategy where you average your entry price. In this case, it averages the entry price of your futures position on Bitcoin or any other asset you choose. Next, the Arbitrage Bot. Here we cannot configure it manually, we can only choose from the existing ones. Let me briefly explain how it works. So, the bot attempts to earn on price differences between markets or between spot and futures, depending on how Binance implements it. If we open, for example, the BTC-UM Arbitrage tab, we will see that this bot trades between spot Bitcoin trading on Binance and futures Bitcoin trading on Binance, in short, with 2x leverage. As you can see, here is the price difference. Below, the bot shows how much it can generate in 3 days, 7 days, and 30 days. Even lower, as you can see, it recommends a minimum holding period 38 days. So if the bot sees that the same asset is cheaper on the futures market and more expensive on the spot market, or vice versa, it buys and sells accordingly, capturing the difference. This strategy, in theory, depends less on market direction because the bot earns on price imbalances, not on market growth or decline. Here you must specify the investment amount, in our case the minimum $250 that you are willing to allocate to this bot. And below you need to set the entry spread, the exact value at which the bot will take action when it detects the price difference you specify. After that, tap create and the bot will launch. Let's go back. Next, the Rebalancing Bot. This one is quite interesting. It helps automatically maintain the desired allocation of assets in your portfolio. For example, you want always to keep 60% in Bitcoin and 40% in Ethereum. The bot will automatically sell when the share of one asset grows too much and buy when the share decreases. So if Ethereum grows and now represents 50%, while you wanted only 40%, the bot will rebalance it. This is convenient if you're holding a long-term portfolio and want to reduce risk without manually tracking every coin. You can scroll, you will see ready-made sets for coins. You can tap, see what's inside, or go to the manual tab and set how many coins you want, what percentage each coin should represent, the maximum investment amount, and then start the bot below. Everything is quite simple and it will automatically start buying, selling, or rebalancing for you. Let's go back, let's open the bot tab again and move to Spot Algo Order section. So, what is this bot? It's a tool that breaks large order into smaller pieces and executes them gradually. For example, you want to buy a large amount of coins. Placing a single big order can cause a sudden price jump. Algo Order splits it into many small orders that get executed, progressively reducing the risk of moving the price. This is useful if you are planning a large trade and want to avoid pushing the price because of your own order. Here you simply specify the amount you want to buy. You also choose whether the order should be executed using TWAP or POV. TWAP means it's spread out over time. POV means it's spread out as a percentage of current trading volume. You can also choose the duration, for example 1 hour, and how often the bot should place orders, every few minutes. After that you tap place order and that's it. For the next hour Bitcoin will be bought according to the settings you configure it. Let's go back. Now we have the DCA bot. This is very simple. Essentially it's a classic DCA bot, dollar cost averaging. The bot will automatically buy and sell small amounts at regular intervals. For example, every day or every week instead of investing full amount at once. This helps reduce risks if you want to enter gradually. If you buy gradually, you are less exposed to losses if the price moves against you immediately. Very convenient. More and more people now accumulate Bitcoin using DCA. In the settings, you specify at what price deviation, percentage, Bitcoin will be bought, at what deviation it will be sold, the size of the first order, each subsequent order, and the number of grids. It's very similar to configuring the futures DCA bot. 2 bots left. They are rarely used, but I'll explain how they work. First, TWAP futures. This is simply a futures order type that Binance decided place in the bots section. If you open it, it redirects you to the classic futures trading terminal where a TWAP order is already pre-selected. This order types allows you to execute large positions over a certain period of time, distributing it evenly. That's all. I wouldn't even call it a bot. It's just an order type, but Binance placed it under bots. And the last one, futures VP. This bot is similar to WAP or Algo Order. It's used for gradually executing large orders. The bot splits the order depending on current trading volumes to minimize price impact. So, it focuses not on the time, but on the market's trading activity. It analyzes when the market is more active and inserts its trades in a way that best fits into the overall flow. This matters for large orders. Now let's think about which bot is suitable for what. If you want to catch price fluctuations in a calm market, use spot grid or futures grid if you are ready for risk. If you want to invest long term and average your entries, use the spot DCA bot. If you have a portfolio of several coins and want to automatically maintain balance, use the Rebalancing Bot. If you're planning a large trade and worry it will move the price, use spot Algo Order, futures, TWAP, or futures VP. If you want to profit from price differences between markets, Arbitrage Bot. And if you trade futures and want to spread your leverage order over time or volume, you can also use futures TWAP or futures VP. That's basically everything you need to know about how grid bots work on Binance. If you still have questions, feel free to ask them in the comments. I'll try to answer all of them. Bye.